In this video, I'll answer the question, if PayPal stock is a buy. I'm going to be using my simplified 6-step framework for analysis, so let's get right into it. The first step in my framework considers the customer value, and PayPal offers convenient payments for customers shopping online. That alleviates the annoyance of putting your new payment information into every new website that you go to shop at, compared with PayPal, where all you got to do is put in your email and your password, versus if you're using your credit card information for every new website, you got to put in the credit card number, your name and last name, maybe your address, maybe the three numbers on the back, the date, and all of this all billing information. So like maybe 5 lines of information versus just your login and password, which you might already have automatically stored, which will be much faster and easier transaction. I know for me that helps a lot. I tend to not want to input my credit card information on various new websites, and so being able to use PayPal on different website is a convenience advantage. And judging by the fact that they've accumulated 429 million active accounts worldwide, including 6 million merchant accounts, shows that customers perceive great value in using PayPal accounts. Furthermore, the Net Promoter Score, which measures essentially how likely are you to recommend PayPal to a friend, family member, colleague, or whatnot. PayPal has a Net Promoter Score of 65, which is, if we look at the scale here, the score is great and it's bordering a score of excellent. So tremendous customer value from PayPal. The next step in my framework looks at unit economics, and PayPal's investments in technology have been scaled large enough across a large enough user base to deliver solid profit margins, right? It invests in the technology, and then the more users it has, it can spread the cost per user out among a wider base of users. And so that's allowed it to deliver operating profit margin averages of 16.1% in the last decade. Excellent margins there. And earnings per share soared from 7 cents a share in 2012 to $3.52 in 2021. So excellent earnings growth, excellent profit margins. The next step in my framework looks at the total addressable market, and according to PayPal management, their total addressable market is a massive 110 trillion and growing. One of the largest total addressable markets in existence. The next step in my framework considers competition, and one of the faster growing competitors, Venmo, is owned by PayPal. So that's alleviates some risk from competition. Still, other digital wallets are expanding, payment competitors rising, including those offered by traditional banks. Think something like Zelle from Bank of America. So they're rising, and this is a fiercely competitive area. But interestingly, embedded payment giants like Visa and MasterCard are not easing credit terms for merchants to crush all of these new entrants, right? They are still charging merchants, 2 to 4%, very depending on how they're doing it, plus maybe fixed price fee. And so merchants are still paying a hefty sum to Visa and MasterCard to process payments, and that's giving rise to their willingness to incorporate PayPal as a payment platform, plus the fact that PayPal has over 400 million active users makes merchants want to accept PayPal as a payment method because they already have such an established user base. The next step in my framework looks at valuation, and I would say PayPal stock is fairly priced, looking at the price to earnings ratio and the price to free cash flow ratio. Looking at price to free cash flow first, which is at 18.68 here on the bottom, it's on the lower end of what it's been priced at over the last 10 years, going back before 2016. But looking at the price to earnings ratio here of 47.3, it's about average. It's about trading at its average price to earnings going back to 2016, a little bit above, I would say, the average over the last 10 years. A little bit, of course, the valuation got stretched a little bit right after the pandemic onset as consumers were spending more money online. Sign up growth accelerated, total payment value accelerated, and so that created a surge in the valuation, and now that's come down significantly. Overall, I would say PayPal stock is fairly valued. It's not cheap, it's not expensive. The final step in my framework considers risks, and the primary risk here is the recent user agreement blunder. If you're not aware, PayPal updated its user agreement. In there, it noted there would be a $2,500 per user potential liability for spreading misinformation, and that was widely unpopular. It created a surge in customers searching for how to cancel or delete their PayPal account. This happened in early October, and since PayPal quickly retracted that user agreement and replaced those terms, however, it remains to be seen how many users it lost during that period. We will know more when PayPal announces its next quarter's earnings results. So that's a risk that is adding to uncertainty and perhaps caused millions of PayPal users to cancel their or delete their accounts. Second risk I note here are headwinds to e-commerce sales. As economies have reopened, consumers are spending money more on restaurants, travel, and those sorts of things, and less money on e-commerce sales, which is where PayPal tends to generate a significant portion of its revenues and fees from. And then secondly, the world economies are slowing down as the pandemic is giving rise to an ugly bout of inflation, causing central banks to raise interest rates, which is increasing the chances of a recession, which of course will cause a decrease in spending, and that could be a risk to PayPal since it generates revenue off a percentage of sales basis on the most part. Those are the two primary risks for PayPal. Finally, now that I've looked at each step in my 6-step framework, let me assign a grade to it. For customer value, I gave PayPal an A+ here, adding convenience to the payment processing method and evidence of significant customer value from their 400 million active users. They get an A+ there. Unit economics, they also get an A. They've reached a large enough scale to deliver excellent profit margins, excellent earnings growth. Total addressable market, A+. I can scarcely think of a market size larger than the one that PayPal is addressing. Competition, I would give them a B- here. Fiercely competitive industry. Competition is rising, not decreasing, and so they get a B- there. Risks, I give them a B. The uncertainty around the customer agreement blunder and the near-term risks of a recession, give them a B in this regard. And then valuation, they get a B- because the stock, I noted that the stock is not cheap and it's not expensive, it's fairly priced. So in that regard, I would give them a B, and then they get a minus because of the near-term risks to earnings from the retrenchment of customer spending, changing their habits, so that could cause earnings to pull back a little bit, as well as how it will impact earnings during this customer agreement blunder. If there was millions of users that canceled their PayPal accounts, that could be a hit to earnings as well. So B- for earnings. I'm sorry, B- for valuation. Okay, now that I've graded it, the next step, the next slide will tell you if PayPal stock is a buy. But before I move on there, this is where I would recommend for you to subscribe to my channel, because this recommendation is not a static recommendation. It's going to change over time. Whether or not it's a buy, sell, or hold changes from week to week, from month to month, from quarter to quarter, as the company announces updated financial figures. So you're going to want to subscribe, because I will be providing updates on my channel, and I will tell you if those updates impacted my recommendation. So go ahead and subscribe now. All right, that said, it's time to answer the question, Is PayPal stock a buy right now? And the answer is that PayPal stock is on the borderline. I'm almost there to where I would want to recommend PayPal stock as a buy. The excellent customer value combined with the massive total addressable market and excellent profit margin and earnings growth are contrasted by the near-term risks from this blunder and the fact that the stock is not cheap. In addition to these near-term risks, I would hold off on buying it just yet. I would wait till at least the next earnings announcement so that we get more information regarding how customer signups, active users were impacted from that customer agreement blunder. Once we get information on that regard, and if it's not too negative, then I would say PayPal stock could be a buy. I will update you once those earnings are out, so make sure to subscribe and keep up to date. Watch that video once I make it and give you that update. All right. So that's all I've got for PayPal. The stock is on the borderline. It's almost a buy. A few more things could cause it to jump the ladder and become a buy, and I'll keep you posted whenever it does. Okay, so thank you for watching, and tune in next time for the next installment of Is This Stock a Buy? I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.